This is Nightly Business Report with Tyler Matheson and Sue Herrera.
They corrupted the business of worldwide soccer to serve their interests and to enrich themselves.
Soccer scandal, the world's most popular game and possibly the world's most lucrative sport, embroiled in a massive, decades-long global corruption scheme. Secret sauce: why McDonald's is becoming more secretive as it tries to turn its business around. Pay for performance, the new push to tie the cost of cancer drugs to how well they work. All that and more tonight on Nightly Business Report for Wednesday, May 27th. Good evening, everyone. I'm Tyler Matheson. Sue Herrera is off tonight. A big bounce back for stocks, and the NASDAQ closed at a record. But we begin tonight with what some are calling the World Cup of Fraud, a scandal that is rocking the world's most popular sport, soccer. The U.S. Justice Department alleges some of the highest-ranking officials of soccer's governing body, FIFA, participated in bribes, money laundering, and racketeering. And the investigation is global. Authorities in Switzerland have also launched a separate probe. Now, soccer isn't just a sport. It is a business, a big one, that brings in billions in revenue from TV and sponsorship rights for the World Cup, the most popular single sporting event in the world. Eamon Javers has our story tonight on the big corruption investigation in soccer.
The day began with a dramatic early morning raid at the luxury Bar au Lac Hotel in Zurich, with staffers holding sheets to protect those arrested from the photographer's glare. It was a massive, global, coordinated crackdown on the top leadership of a sport that dominates the world like no other. As many as 1 billion people watched the 2014 World Cup in Brazil. And Forbes reported that companies such as Adidas, Coca-Cola, Emirates, and Sony reportedly paid $25 to $50 million per year to sponsor the sport's governing body, known as FIFA. In Brooklyn, the director of the FBI said the U.S. is acting because some of the alleged corruption happened in the United States.
If you touch our shores with your corrupt enterprise, whether that is through meetings or through using our world-class financial system, you will be held accountable for that corruption.
And the new Attorney General, Loretta Lynch, said this case comes down to simple greed, including up to $150 million in bribes.
They were expected to uphold the rules that keep soccer honest and to protect the integrity of the game. Instead, they corrupted the business of worldwide soccer to serve their interests and to enrich themselves.
As laid out in the indictments, the U.S. side of the scam was simple: marketing companies paying kickbacks and bribes in return for exclusive rights to lower-level soccer tournaments. But in Switzerland, officials said they're looking into what role bribes may have played in the awarding of the World Cup itself to Russia in 2018 and Qatar in 2022. And Tyler, as the day ends, there are two big questions facing world soccer tonight. One of them is the fate of Sepp Blatter. He's the head of FIFA, the organization that sponsors worldwide soccer. He was not named in any of the indictments today, but big questions now surrounding his leadership. And then the second question is, what will all the corporate sponsors of global soccer do now? Will they continue to pump all those billions of dollars into FIFA and global soccer? Tyler?
You mentioned, Eamon, several of the names that have been involved in supporting FIFA. But a major U.S. sportswear company has been implicated, apparently, in this scandal. The company was not named, but what do we know?
Well, what we do know is that they were not named in the indictments or by the Attorney General Loretta Lynch, who said today that a major U.S. Sports apparel company was allegedly involved in improprieties regarding the Brazilian national soccer team. We do know, however, that Nike was a sponsor of the Brazilian national soccer team, and we also saw a big movement today in Nike stock down as investors apparently deciding that it was Nike that was being referenced there. The Department of Justice, however, not saying which company it's talking about in that indictment.
And no U.S. company has been indicted or charged in this. These charges came against individuals who were officials with or formerly officials with FIFA, correct?
No major U.S. companies, Tyler. There were indictments against individuals and also a couple of small companies, sports marketing companies, that had a U.S. presence. So there were corporate indictments involved here as well. But this is a globe-spanning series of alleged criminal activities ranging from Uruguay to Argentina, Brazil, Miami, and also, as we saw this morning, arrests in Zurich at that hotel, Tyler.
All right, fascinating story. Eamon Javers, thank you very much.
You bet.
Well, here are responses from some of FIFA's sponsors. From Adidas, we encourage FIFA to continue to establish and follow transparent standards in everything they do. Coke says, we expect FIFA to continue to address these issues thoroughly. McDonald's says it takes such matters very seriously and is monitoring the situation very closely. And Budweiser is also closely monitoring the FIFA situation. Well, the bounce back in stocks drove the NASDAQ to a record close today, and the blue chip Dow index saw another triple-digit move. By the close, the Dow Jones Industrial Average gained 121 points to 18,162. Strength in technology helped the NASDAQ close at a record 5106, and the S&P 500 was up 19 points. Mary Thompson now with more on today's gains from the floor of the New York Stock Exchange.
The markets respond to Tuesday's triple-digit decline in the Dow with a triple-digit gain on Wednesday. Stocks were up ever since the opening bell, thanks to the strength they saw in the European markets coming into the opening bell, and then helped, of course, by strong earnings report from a number of retailers, including the jewelry retailer Tiffany's and designer Shoe Warehouse. That helped to offset a disappointing forecast from retailer Michael Kors, which weighed on some of that company's rivals, including shares of Coach in Wednesday's session. Now, around midday, the markets received an additional boost from reports that Greece and the EU are in talks, at least toward taking preliminary steps to reach some kind of an agreement that would allow the troubled country to pay its creditors. And then adding to the market's gains later in the session, reports that Avago is in talks to buy Broadcom in what could be one of the biggest tech deals this year. That gave a lift to semiconductor stocks and, again, the broader markets. In fact, the biggest winners among the Dow components were those in the tech space, including Microsoft, Cisco, and Apple. Also stronger in today's session, the dollar. As the U.S. dollar strengthened, though, that put pressure on commodities, and we saw weakness in energy stocks as a result. The only laggards among the sectors that we follow within the S&P 500. So again, a triple-digit gain for the Dow in Wednesday's session. For Nightly Business Report, I'm Mary Thompson from the New York Stock Exchange.
As investors watch possible developments out of Greece, a potential debt deal is just one of the topics being discussed at the Group of Seven meeting in Dresden, Germany, where finance ministers and central bankers from across the globe are gathering. Steve Sedgwick has our story.
G7 finance ministers and central bankers are meeting in Dresden, Germany to discuss a whole host of global issues. There will be representatives from Japan, the United States, Canada and the key European nations in a summit hosted by Germany. The host, Wolfgang Schäuble, has gone on the offensive ahead of this summit, saying critics of Germany and its austerity policies are misplaced in their accusations and indeed misplaced in their diagnosis for how to get out of the European debt crisis. Once again, Greece is grabbing way too many headlines. It's not even on the official program, but it will be on the agenda. There are hopes coming into this meeting that Greece may finally be on a path to an agreement with its creditors so that it doesn't default on loans to the IMF and ECB and others in June and beyond as well. Elsewhere, there are big concerns about global growth, of course, and when the timing of the first US interest rate hike will be and what the markets will do in reaction to that, especially concerns about the foreign exchange markets. Other concerns include when will Japan finally pull itself out of a flat inflation stroke deflationary environment. The central bank governor of Japan expects a 2-year timeline to get to 2% CPI. So a whole host of growth issues globally, but once again, here in Dresden, it is Greece that is dominating the agenda. Steve Sedgwick for Nightly Business Report in Dresden, Germany.
Here in the U.S., a massive study by the Federal Reserve of American households finds that average Americans are feeling somewhat better about the economy and the recovery. But many are still under financial stress when it comes to their jobs, homes, retirement. A second annual survey finds that 40% of individuals feel somewhat better or much better about the economy. That compares to just 31% who said the same last year. Now to one of the most well-known brands in America and the world, McDonald's. The company says it plans to stop reporting monthly sales comparisons beginning July 1. That means investors will not have access to a key measure of progress in McDonald's turnaround efforts. At a conference today, CEO Steve Easterbrook said the world's largest fast food chain will instead focus on its longer-term strategy. Shares of McDonald's up a little bit, fractionally, today. Well, as Mary Thompson mentioned earlier in the program, Tiffany and Michael Kors reported very different quarterly results. Tiffany said new items and price increases helped its bottom line, while Michael Kors reported its slowest quarterly revenue growth since it started trading publicly 4 years ago. Tiffany shares took off. They were up 10%. Michael Kors saw its stock lose almost a quarter of its value. Courtney Reagan goes upscale for us.
Two higher-end retailers giving Wall Street very different reports today. Luxury jewelry company Tiffany's earnings and revenue did fall less than expected, but after the company lowered guidance for the quarter just 2 months ago. Comparable sales in North America and Asia Pacific increased, but only slightly due to continued headwinds from declining tourist spending in the U.S. as a result of a stronger dollar. Europe proved to be the bright spot for the company. Relatively weaker currency there makes it an attractive destination for foreign tourists spending mostly on fashion jewelry, like the new Tiffany T collection and other gold jewelry. The company maintained its full-year forecast, citing continued macro challenges. Overall, analysts say the business is on the right track.
Luxury-wise, I think Europe's on sale right now if you look at what the exchange rates have done to the price proposition there. So I think you're seeing a lot of tourist flows there. And the U.S. comp back in positive territory. This is a good sign to give investors a little bit of confidence.
But at Michael Kors, it was a slightly different story. Suffering from similar challenges, the premium handbag maker warned current quarter and full-year results would fall well below forecasts, also turning in its first negative comparable sales result. That sent shares plummeting.
The handbag sector could be experiencing moderating growth trends, specifically low single digit versus mid to high single digit previously. Tourism was a negative impact, as well as watches slowing growth and some shipping delays. So they really revealed a lot of different information, and we see in consumer retail land, a tale of two stories.
But others look at Michael Kors and see more company-specific issues, one of which is the potential oversaturation of the brand in the U.S. While few expected Kors' previous trend of high double-digit comparable sales growth to continue forever, some think the brand is losing its cachet among consumers in its biggest market. The good news for Kors, however, is that most think there is still global share to be gained. Jefferies analyst Randall Koenig tells investors Kors could triple its European business and grow even more than that in Asia. For Nightly Business Report, I'm Courtney Reagan.
Still ahead, should the price of cancer drugs be tied to their performance? A controversial new push to change the way some treatments are priced. Forecasters predict a below-average hurricane season this year. The National Oceanic and Atmospheric Association says between 0 and 2 major hurricanes will affect the United States. And although the season is expected to be mild, small businesses along the coast are paying very close attention because, according to FEMA, 40% of businesses never reopen after a disaster, like when a hurricane strikes. Profits at the nation's biggest banks rose nearly 7% in the first quarter. The Federal Deposit Insurance Corp, or FDIC, says strong trading revenue and a decline in delinquent loans contributed to the rise. The chairman of the FDIC says the report shows a gradual and steady improvement in the industry.
There was further improvement in asset quality, and the number of banks on the problem list declined to the lowest level in more than 6 years. But according to Gruenberg, the interest rate environment remains a challenge for the banks.
Well, an update on a story we told you about yesterday. According to CNN, the IRS believes the theft of about 100,000 taxpayers' personal data from its computer system originated in Russia. The tax agency's criminal unit is leading an investigation on the cyber attack. Well, the FBI is reportedly investigating a surgical device manufactured by Johnson & Johnson. The device was found to spread cancer in women. According to the Wall Street Journal, the agency wants to know what J&J knew about the tool before pulling it off the market. Well, there's a new push now to tie the price of cancer drugs to their performance. Express Scripts, a large manager of prescription drug benefits for U.S. employers and insurers, has been aggressively trying to lower the price of drugs. But will this new model work? Meg Terrell reports.
It's sometimes referred to as pay for performance, the idea that medicines should be reimbursed based on how well they work. Express Scripts is the country's largest pharmacy benefits manager. It negotiates drug prices on behalf of health insurers and employers. And it's been waging somewhat of a war on the cost of medicines. It started with hepatitis C, where Express Scripts negotiated a discount with AbbVie to exclusively provide its regimen, at the expense of those from Gilead and others. Now the focus is cancer drugs, for which costs in the U.S. topped $100 billion last year.
Oncology has been a hot-button topic in terms of the overall cost of drugs steadily rising to the point where we're used to seeing drugs well in excess of $100,000 per patient year. And there has been, along with everything in the drug sector, a growing noise around the ever-increasing price of drugs.
Express Scripts' plan has two parts. The first focuses on how well drugs have been shown to work in different cancers. Chief Medical Officer Dr. Steve Miller cites a drug called Tarceva as an example. It's approved both for lung cancer and for pancreatic cancer, but it's proven in clinical trials to extend patients' lives by months for lung cancer and only a couple weeks for pancreatic. So he says the new plan would reimburse more for the first.
The second part of the plan looks at how well drugs work for individual patients. That would require more diagnostic testing up front and monitoring patients as they receive treatment. Express Scripts says it's enlisted outside experts to advise it on the value proposition of cancer drugs, and that health plans representing millions of people in the U.S. have already signed on.
Biotechnology analyst Brian Scorney points out a similar system is already employed in Europe, where governments provide health coverage and in some cases deny use of drugs based on their price.
They basically determine whether the benefit of that drug justifies the cost of that drug. And while the UK was the first, the rest of Europe has really fallen in line with more or less doing the same sort of value-based pricing for drugs in general. Now, in the U.S., we don't really have that market approach at all.
That may be starting to change. For Nightly Business Report, I'm Meg Terrell.
More details now on that possible semiconductor deal, and that is where we begin tonight's market focus. According to Dow Jones, Broadcom is in advanced talks to be bought by Avago, which would be the latest in a string of semiconductor mergers. Both companies have a market value of around $30 billion. Broadcom popped almost 22% to close at $57.15. Avago finished 8% higher at $141.49. Movado out with mixed results. The watch retailer's earnings were below estimates as it was impacted by currency fluctuations. Still, the company says it was able to overcome that and a weaker retail environment. Shares dropped almost 4% today to $26.56. Chico's reported that its first quarter profit dropped by almost 20% on restructuring charges and lower sales. The women's retailer has been closing stores, cutting jobs and costs to turn its business around. Shares closed a fraction lower today at $16.64. The ISS Proxy Advisory Services firm urges Caterpillar's shareholders to reject the executive pay plans for the company's CEO. The firm also recommends that shareholders vote against the re-election of one of the construction equipment maker's directors. The stock rose a few cents today. $87.92 is where it finished. Unemployment rates fell in 23 states in April as hiring rebounded nationwide. Nebraska reported the lowest unemployment rate, 2.5%, followed by North Dakota at just above 3%. The highest rate is in Nevada at 7.1%, followed by West Virginia at 7%. Despite the falling unemployment rates in many states, more than 9 million Americans don't have jobs. But companies across the country say they're still having a hard time finding workers, qualified ones. So what's going on? Labor experts call it the skills gap. State officials trying to lure businesses call it an opportunity. Scott Cohn has the story from Fremont, California.
It's no accident that Tesla's main vehicle factory is in Fremont, California, in the San Francisco Bay Area. This place has it all.
It's this unique place where you have a combination of a manufacturing workforce at the ready, but also a high technology workforce at the ready.
There are auto workers from the GM and Toyota plant that used to be here, and tech talent from Silicon Valley nearby. And when the company was deciding where to build its new $5 billion battery plant, it followed the same formula. Nevada won that competition, and it wasn't the $1.25 billion in incentives from the state that sealed the deal.
A lot of the assurances we got were, if you come and you invest here, we'll definitely have the workforce for you. We are used to building things quickly, building things fast, and we have the workforce available for you as far as manufacturing jobs go.
This voracious appetite for people is not lost on the states, at least the most competitive ones. Instead of just using taxes and incentives to lure businesses, they're touting their workforces like never before. We analyzed all 50 state economic development websites and found that for the first time since we began keeping track in 2007, workforce is the most frequently cited selling point. It used to be business costs like low taxes and utility bills. Melissa Ehlinger, who makes the pitch to bring businesses to New Orleans, says the key is matching the workforce with the needs of businesses.
Traditionally, workforce has been sort of supply side driven, thinking about the individual. And what we're doing in the economic development profession is sort of flipping the switch on that and saying we need to focus on the demand side. What is it that industry needs? And then tailor our education and training programs accordingly.
Everyone seems to agree on that, including Congress, which last year overwhelmingly approved a complete overhaul of the nation's workforce development policy, the first update in nearly 20 years. It's badly needed. Even with millions of people out of work, one recent study found half the employers surveyed had open, skilled jobs that they couldn't find anyone to fill. Scott Cohn, Nightly Business Report, Fremont, California.
To read more about how states are fighting for business, head to our website, nbr.com. And coming up, flippers are back as the housing market heats up, but this time around, it's a lot harder to make a fast buck. A recall to tell you about, two of them, in fact. Ford issued two of them today on more than 440,000 cars, one for a power steering problem on many of its recent model sedans and crossovers, and the other to fix a heat shielding issue on the new Ford Mustang. The automaker says the power steering issue has resulted in accidents but no injuries. More housing data out today. Mortgage application volume fell by more than 1.5% last week, according to the Mortgage Bankers Association. This is the average rate on the conventional 30-year fixed mortgage is now slightly above 4%, and borrowers are pulling back from refinancing. Toll Brothers reported better than expected earnings. The largest U.S. luxury home builder raised the low end of its average selling price forecast as demand increases. But revenue came in a little bit below consensus as the number of homes the company sold declined. Shares fell more than 2% today, as you see there. Well, as home prices rise at a fast clip nationally, that could mean a fast profit for house flippers. But it isn't as easy as it sounds or looks on those TV shows. Tight inventory is upping the competition and the risk. Diana Olick has the story.
This D.C. row house is in a transitional neighborhood on Capitol Hill, and it just went through quite a transition itself, thanks to real estate agent and house flipper Crystal Getz.
Our goal is to completely come in and redo the house from top to bottom, completely gut it, completely remake the house.
That's what she and her contractor husband did after purchasing the home last August, but the redo paid off. The home sold in 5 days above asking price with multiple offers. Getz made a 15% net profit, which in this tight and pricey housing market is not easy.
It is like finding the needle in the haystack. You're trying to find that diamond in the rough that is in bad enough condition.
House flipping, which is defined as buying and selling a home in the same year, is now making investors an average gross profit of $72,450, the highest since 2011, according to RealtyTrack. That's an average 35% gross profit. Higher home prices are helping that, even though flippers have to pay more up front. Some of the best market for returns: Tampa, Pittsburgh, Memphis, Chicago, Boston, Seattle, and Washington, D.C. Flipping, though, is more competitive now with so few listings on the market, which is why flippers made up just 4% of sales at the start of this year, a 4-year low. There may be fewer flippers out there now, but investors in the single-family rental market are still going strong and, in fact, are buying homes from the flippers. That's because now that they already have management structures in place, they're looking for turnkey properties just like this one.
It's helping to boost those profits because those single-family rental investors are able to buy at a higher price point and still make their margins, their profits on the rental side of things.
Still, any flipper will tell you it's not as easy as it looks.
The risk for flippers in general can and has increased.
But so too have the rewards. For Nightly Business Report, I'm Diana Olick in Washington.
To get 5 tips for big returns on house flipping, go to our website, nbr.com. And finally tonight, Brand Z is out with its annual list of the world's most valuable brands, and it's no surprise that the battle for the top spot went to Apple. Google came in number 2. And that, folks, is Nightly Business Report for tonight. I'm Tyler Mathisen. Thanks for watching. Have a great evening, everybody, and we'll hope to see you right back here tomorrow night.